Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Friday, December 16th edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we've got not really any earnings, a couple, just Oracle and Adobe, but we do have two guests for you. First, Fari Hamze at 8:15, the founder of Hamze Analytics, and then at 8:35, Nigam Arora of the Aurora Report. You may have seen that one around. So we're pumping for Fari and Nigam today. We've also got some after hours movers. Dennis was mentioning some rumors of a potential Icon stake at IBM that he was trying to look into last night. Not seeing a whole lot there. We have some initiations and notable ratings on that front. RBS downgrading the Drillers, KO downgraded at Morgan Stanley, and Eli Lilly, Goldman Sachs, and GE all doing some stuff. Joel, how are we doing in the S&Ps this morning?
We're doing dandy as usual, trading up four handles, 22.6250. Couple levels on the upside. Thursday's high, 67.75. That's one tick off the all-time closing high of 67.50. Then the all-time high, 22.73. On the downside, the close, 58.50, buffeted by the pre-market low of 56.50. Crude, little rally here, nothing crazy, up 27 cents. Still a nice range in crude, trying to recover here. Had a few down days, but now running back up. We'll talk about the drillers here. I guess RBS is not so convinced that this oil rally is for real. Gold and silver, I mean, they're up, but if you consider how much they lost yesterday, I mean, this is just a drop in the bucket here. You can see gold trading up $5 and silver trading up just 1.5 cents. Dennis, how you doing on this Friday morning?
I'm alive, Joel.
You're alive?
Actually, you know what? I'm looking forward to the weekend here, just because this market, it's been a tough market to trade, don't you think?
Well, if
overall,
sure.
And obviously, the banks here now are back all-time highs here again. So you had the 3-4 day pullback, but it's been a tough market. A lot of people say, a lot of traders say they've been really like this market. And obviously, you've been long the financials, or you've been long some of these consumer or the cyclicals, or the industrial. If you've been long the right sectors, you're pretty happy. But if you've been long the wrong sectors, or you've been short, it's been a tough market.
I mean, it's one of those things where, maybe the intraday and shorter-term trading is a little tough, but, it's still not bad for your portfolio.
You know what?
Right?
Yeah, and that's what it is. Like, my invest portfolio is doing fine. It's the trading, because you, take news and you analyze the news, and sometimes it just goes the opposite direction. Take Stone Energy, for instance, SGY. Here's a stock that goes Chapter 11 yesterday. So you're thinking, okay, this is it, SGY, it closed at, $6. And, okay, well, it's down a little bit in the pre-market, but it's Chapter 11, right? So you're thinking, okay, let's just say, even hypothetically say that you were an insider, and you had inside information on Stone Energy, and they were going to go Chapter 11, and you short the boat like the day before because you got the inside information. The stock closes up yesterday on a Chapter 11. I mean, okay, sure, maybe there's a short squeeze. It's already, been killed, but still, are people this, excited about the market that they're going to buy stocks that are in Chapter 11 because they think there might be something, left for them in a restructuring? I just, it's a difficult market to interpret news on.
Well,
and imagine that poor insider that had the inside information saying, yeah, baby, I will make some money here. Boom, I'm short all this, and it opens down. You're like, yeah, come to Papa. And boom, it's in your face, and it's up. There you go, insider. That's what you get for trading on insider information.
Dennis, you did a better rendition of that now than even the one that you did on the pre-market show was really good, too.
I did my evil voice on the pre-market show.
I liked it.
It was an evil insider. And they're all evil insiders. So they get what they deserve. So maybe it's good that Stone Energy rallied and the insider that sold it the day before is gone. But I'm just saying how difficult it is to interpret news sometimes. Sometimes it's black and white, sometimes it's gray, but even on the black and white stuff, sometimes, it's all up to interpretation right now. It's about sentiment as well. I mean, even these earnings reports, and we've talked about it before. If you've got, negative sentiment coming into the report, they report a blowout earnings, it sometimes doesn't go up on it, or the opposite direction where, okay, well, maybe everybody's just hated the stock forever, you could say, and the stock's been weak, and you think, okay, well, here's a big miss, and the stock will rally. So sentiment plays a big role in how these stocks are interpreted after their earnings reports.
Valentina says sell puts on the indexes and sit back. Jimmy A. Sanity will return at one point, but he may be insane by then. But that is.
I'm insane already, Jimmy A. I'm with you here. This market, like just from a statistical and I do a lot of stat arb. That's like my bread and butter. That's how I've made my money 17 years. What is statistical arbitrage? It can be a number of things, But basic statistical arbitrage is derived from pair trading, looking at relationships between stocks and saying, okay, well, if this, energy stock, is getting weak, these other energy stocks are going to be weak. Or if General Motors is looking really good here, reporting a good quarter, Ford's probably going to move as well. That's the basics, and then there's lots of spin-offs. We've got piston trading. We've got all kinds of different things that we've taken, and statistical arbitrage is just basically looking at relationships between stocks. And, and I've talked about fair value, and I look at all different plays, the banks and stuff. Those relationships have, blown out here the last 3-4 weeks since the Trump market's come in. Because, I will tell you, before the Trump market, everything kind of just moved together to a certain extent. Like you could short, Citigroup against a stock like General Electric and be fine. And that does not work right now. Like you've got to be sector to sector. You've got to. You can't be. You can't just say I'm going to be long one sector, short another one, and overall they're going to kind of go in sync. Some of them are going in exact opposite directions right now. So like Jimmy A is saying, yeah, it's real tough for stat arb. He must be doing some of that too. Relationships have changed and lots of divergences. And that is, what you've got to do. And as a trader, we talk about this all the time. It's all about adjusting on the fly and adjusting to your new environment. The environment might come back, stat arb might come back, and all these relationships might come back in as well. But it can take a long time for that stuff to happen. So you need to adjust to your environment. And that's the key for longevity in the trading industry.
Bob Wire is getting up early here, and he was in the chat before 7 a.m., and he asked if we could talk a bit about the Russell 2000 IWM fund and some tech too hot to chase, small cap rally continue, and also predictions on this Trump craziness in the small caps. Is everything going to be great again? Let's just go to the Russell here and pull up that chart. Don't have my crystal ball on what's going to happen here with Mr. Trump, but I mean, you had to move up here. I mean, you got the trend. Let's see if we can look at this and identify the trend. Even I can see this is an uptrend. You hit a high, you pull back, a little bit of a pullback, a little bit of consolidation. To me, above 135, you like this thing on the long side. 138.82 is your
Hard to
time
fight that trend.
Yeah, Dennis, any opinion here on the small caps or what Mr. Trump could possibly do better?
I mean, we're just in seasonality here right now. So ignoring Trump and ignoring everything, people like buying stocks in December. You have portfolio managers chasing money here right now. I think it was Gil Morales was talking about that. But you've got a lot of, portfolio managers here that probably have been underinvested in a lot of these Trump stocks. And, you're getting towards the end of the year. You have 15 days here for these portfolio managers to try to accumulate these. Every time they seem to pull back any of these things, they could buy them right back here again. I mean, even yesterday, take a look, the banks got bought, obviously, but, that was more Fed. The three interest rates took the market by surprise. They were a little more hawkish than, what we thought. And that's maybe why, the fundamental reason why the financials have come right back here. But take a stock like Nucor, NUE. Yesterday morning, it was going to be down for its sixth straight day, and it went all the way down to 61.01, opened very weak, and then it turned, and you had a green candle yesterday. And I look at this one here, and I think, okay, these steel stocks, there might, all of a sudden, you look at it and you think, well, still, pretty incredible run. But they want to own stocks like this. And the institutional money manager's looking, okay, now's my chance. You got your first green candle here. You take a look at stock like U.S. Steel. U.S. Steel's had two green candles here in a row. Makes me start to think an AK Steel's another one. It's been up 3 days in a row. So now you start to think, okay, they're starting to come back in these stocks here once again. So if I was short on UE, I'd think, I might be covering that now. If I got lucky enough to get 66 or 67 on the short, I think I'd be booking those gains because these money managers might start chasing these same stocks again coming in the next 2 weeks.
Hey, Dennis, were you around when Bethlehem Steel traded?
I remember what was the symbol on it. I remember it, but I can't remember the ticker. What
I,
was it?
I, I think it was BS.
You got BS.
Yeah,
And then
yeah.
they changed it. They realized that's not a good ticker symbol. But we always say we're going to do the good ticker symbol show. That would be on the bad ticker show. Do you have a story about Bethlehem Steel?
Just I traded it
Ticker
at
symbol.
I traded it at Oldie, and there was a guy that would swing 100,000 shares in it, and it would be like like a all or nothing order. So when they wiped out the New York book, I don't know how many times this happened to me. I'd have to fill the guy on it, and then it would get locked down at like 100,000 at 10, and then it goes the books erased. Boom, it goes 10 bid for like a second. So I have to fill the guy's order, and then it would like go offered again, and I'd have to put a GTC order and sit there for like another 2 weeks to get out of like the 100. Because if you lose an eighth on that, that's a lot of money. So I mean, a few,
100,000 shares.
yeah, 100,000, yeah, all or none. These Oldie had commission-free trading back then for accounts like over 100,000, and these guys were just so sharp, man. They were like the high-frequency traders. They would, come in with these orders, and you just would think, no big deal, and then all of a sudden it'd be a Dorfman stock, and you'd get caught in it. But that's always what I remember about Bethlehem Steel.
Big orders like that. Remember when there was big orders in the buck? You'd see orders like the odd time we point out one, like a big order here now. But for the most part, most of the institutions hide their order flow because they don't get sniffed out. They don't want, show their hand and everybody move the price away from them. So when you want to buy 100,000 shares, they break it up into little algorithms or they hide the orders, and it's a lot, and they got smarter. The fish got smarter there because when you threw a 100,000 share order on the buck 20 years ago, people were going to buy ahead of that. They're like, whoa, we got a big fish, and we're going to jump in here, and we're going to trade ahead of that order. And you could do that. I mean, they were just showing their hand. It was like playing poker with an open hand. And they got smarter. They break them up. They don't do it like that way anymore, Joel. So when you see a 100,000 share order out there now, it means a hell of a lot more even because there ain't any out there.
Cajun One wants to know when the tax loss selling starts, but there's no one has any losses, so I don't know.
They do in certain stocks. And typically, 3 days settlement. So you start thinking a couple days, before the end of the year. So that's when, you might, oh no, tax loss selling. You're saying tax loss.
Yeah.
So when does that start? Yeah. So anytime before the last 3 days of the year because of the 3 days settlement. So tax loss selling could be starting a little bit now. It really picks up after Christmas. So that's when you'll see stocks that have been weak start to really get weak. And you might see some tax loss selling in the gold miners. Because if you're looking for a sector that has had a really rough 2016 here, and they started 2016 really well, so I should
Yeah.
say they've had
Yeah, this
a
is a
back
tough one.
half of 2016 they've had it rough. So if you've been buying gold miners in the last 6 months, you're significantly under pressure. So that's one that could be potential, but there's other ones too. There is some stocks trading near 52-week lows, believe it or not. You just gotta go out and look. There's some of your REITs, some of your defensive names have been here as well. But if you're looking at a stock that's really been beat up, that typically really accelerates after Christmas up till those last 3 days, because obviously when you're 2 days left, then your 3 days settlement's taking you into the next year. But do they still do it? Because that's the way they do it in Canada. Do they still do it on the tax loss selling by settlement date, or do they do it by trade date in the
I
U.S.?
think
'Cause
we asked. I
they
think we
might-
asked this
I think they might have
question.
changed that in the U.S. a couple years ago.
Yeah, well,
So it
check
goes
on
by
that.
trade date. There you go, Dr. J. Yeah, they did change it. Dr. J with the save. He says it's the trade date, not settlement date. So you go right to the end of the year now in the U.S. In Canada, it is still the settlement date. So I believe. So, I'm not a tax accountant here, but I'm pretty sure it's still the settlement date in Canada. But in the U.S., it's now the trade date. So I guess you go right to the end of the year. So you can sell it all on December 31st. If we're on trading day, to look at the calendar. What's the last trade day
Yeah,
of the year?
no, that's a Saturday.
It's a
Last
Saturday.
last day of the
So it's
year.
30th. So the 30th is the last day of the U.S. Dr. J with the save because it is the trade date. The trade changed that a few years ago.
Don't quote me on this, but I think the institutions may have like a different, calendar, and some of the fund managers stuff they might be October to October. So some of the tax loss selling, maybe for institutions, you may want to check on that. May have already occurred, but 8:50.
Majority of it happens late in the year.
Okay, 8:15. We got a special guest coming on. We haven't talked to Fari.
Fari!
Yeah, Fari of Hamzy Analytics here. We got to find out. I mean, these Sigma channels. I say Bank America is probably at a 6 Sigma. What do you think, Dennis?
Depends on the time frame, but I want to know what Furry says. We're going to have Furry. Have fun with the Sigma channels, guys. Chat, get ready. Give them some tickers for the Sigma channels. Let's see what they're doing here over the last couple of months, because this Bank America move from 16 to 23 has been absolutely incredible.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alconen, along with Dennis Dick, Spencer Israel, working the boards here behind the glass, and Fari Hamzy, founder of Hamzy Analytics. Dennis, give him the code word for today.
Code word, looking glass.
All right. Explain that one.
Copycats. Okay, all right. Usually it doesn't work like that. If you can't in 3 seconds give the code word, they're going to abort the communication.
Why is it looking glass? What does looking glass mean?
Looking glass is an airplane that it's a doomsday airplane. That's when you're on that, you basically are effectively, if need be, you'll become the president of the country. I mean, of U.S., because something has happened to the Air Force One.
Oh, that's the backup. Looking glass.
Yeah, it's a backup. It's a command post backup. So, and sometimes you have to be. Well, there's in a Cold War, there was always one flying. I was off at Air Force Base. Before one would land, the other one would take off. And usually it would be a 4-star general from the Air Force on board. But the idea was that we are in 24/7 alert. But since then, since 91, we eased back on that. And I think 99 was the last year, or 98 was last year, they stopped flying like that. So it hasn't been a need for that. But Looking Glass is really the National Command Authority. The kneecap, there was a follow-on, which is 747. It's no longer KC. It's no longer 707 modified. It's 747 modified. And it's probably up there in terms of expense beyond some of the Air Force One in cost. And that's the one that Secretary of Defense flies. If you've seen interviews with Ash Carter or especially Robert Gates, there are a lot of interviews done there.
Fari, you teach us everything. Fari teaches you everything on this show, not just about stocks. But let's take it into the stocks, because we know you got your Sigma channels working hard here, and we've been talking about you on the show. Your ears have probably been ringing for the last month as Bank America, BAC has moved from like $17 up to 23, and I'm like, holy cow, this has been such a sustained move, one directional here. What are the Sigma channels showing on Bank America? How many Sigma is this thing now?
Well, to me, the moves were really Goldman Sachs and JPM. Okay,
let's go to Goldman Sachs.
All right. And I'm loading up the charts right now. But let me say something about Bank of America, which I told one of my best friends at SIBO. I said, Bank of America is like herpes, you don't want to own this thing, okay? This stock is so messed up. Like Citigroup is slightly better, okay? Citigroup is like, you've had herpes, but they add some medicine to you, okay? That's it. These two stocks, because we put them on life support system, circa December 2008, Jan 2009. We've had nothing but problems with these companies, and I think for every vice president, there's a bank regulator sitting next door to him. And these big banks have vice presidents like you and I, like Mexico has pesos. Okay, so this is how it's been so over-regulated and run because nobody trusts them. If you look at this, here comes the Sigma Challenge. There we go. If you look at what BAC did, they're coming back, one of the slowest recoveries. And mind you, if you chart it long enough, go back enough, you'll see the reverse splits. They have to use the reverse splits for this thing to work out, especially Citigroup. Citigroup had the huge reverse splits. Yeah.
Because Citigroup, you get back 2008, 2009, the all-time high is like $500 a share. So that's
$570. It's $570, and now it's trading at $60. Right. If you go to BAC,
I don't think
it's slightly better. It's 23 versus 55.
Yeah, because BAC never did do
They never did, yeah.
Oh, they did. That's right. That's what they never did.
Citigroup did. AIG did a huge one. Bring up AIG if you want to talk financials. I think AIG
should probably worse than that.
20 to 1 maybe.
And how about what do you call it? GM? Didn't GM do one too?
GM just reorged. So GM, took out the shareholders right out and then gave a lot to the debt.
Oh, I forgot. We need them for votes. They're a union. I forgot that. Hello. This was they're not making cars. We're just financing a union shop. Yeah.
So what's the Sigma
let's not get into politics
show?
here, guys.
Let's go back. Let's go back to Citi. What's the Sigma channel showing on Citi? Because we have a pretty good move from 50 to 60.
There are no. Hold on, Citi. Okay. The monthly is awful. Let's not go there. Okay. On a daily basis, first of all, the resistance is going to be 64 area. On a weekly, on a daily basis, I still need to see 62 plus. Okay, but it's been a nice run, no question about it. It's been a nice run, and here's the problem: 57 cannot violate 57. If it does, you're basically giving up all this run. You got rotating down. The CIs are very high, my friend. The CIs are 23 and red.
What are they normally?
CIs should be anything above 10. The color changes, and it zoomed up on the election day, okay? Went to red the next day and had a nice slope. Now, and it peaked at 30, came back down to 23 and flat. That means most of Momo is out of it. The first hiccup, this baby is doing a U-turn.
So do you think... South. Okay, so look, and they all kind of move together, obviously, the banks. I mean, Goldman Sachs would bring the GS up. It's went from 180 to 240. So it's basically up 60 points on 100. It's up 33%. In the last month since Trump got in. Is this move sustainable?
But if you were going to play it, okay, in a safe way. Well, we're not talking about just short, but I'm talking about practitioner's point of view. If you're going to actually play it, you do a call spread. The best call spread there was Goldman Sachs. Why? It's $200 stock. It has more juice. Murray, we're looking for juice. It's got to move. You see my point? I want, when I get into a trade, when I give advice for a trade, this baby move has to be the best odds compared in the same peer group, okay? Like within the XLF area. The best two were Goldman Sachs and JPM.
So Goldman, you'd be doing selling a call spread on this?
No, buying a call spread.
Oh, so
not
you think
now.
It's going higher?
No, not now.
It could go higher
it's a little bit too far now. I would say day after the election, I would do.
Yeah, if we were
because
back
the slope of the CI was a moonshot. It tells you a moonshot is coming. We went from a fairly flat area in September and October. We had dipped early on in September, post Labor Day. Okay, after that we recovered. The low was like the 27th, 28th of September. Then we go flat, very flat, dead. The patient is on. It's Goldman. It's not in trouble, but look like the stock, not the patient, but the stock is on support system. It's not going anywhere. Very flat, low, small delta on the size of each sigma. Very flat. CIs are absolutely saying, "Don't touch me." Now comes election day, you can't predict that. Nobody could predict it. So we're not going to go there. But day after, look what happened with the CI slope. I can send you one of the charts. Shoots up like a moonshot. So this is going to have continuation. Jump in there now. Would you make a guess that would be 250? I will humbly submit to you, no. You will probably cut it shorter, and you'll overrun that. But you get your full call spread value. Remember, when you have a call spread, you also have it's a parity equation, right? So there's a put involved. If you take a long enough duration on your spread, there's a put out there that's going to work against you. So it's going to take time to get there. Unless you pinpoint it short term, okay, you will never get the full value. Let's say you played a 10 handle, okay? You may go to 9.6, 9.5. You'll never get the full 10, even though you've shot over. Why? Because the parity equation in the put plus they call in the options world. And I would say most people would have undershot this. That is, they wouldn't expect to go to 250, including myself. Remember, right now we're Monday morning. It's Monday morning right now. We're looking at the chart. And Monday morning, there's a lot of quarterbacks. They're a dime a dozen.
So
does that make sense?
Yeah. But now we're looking here at 243, and we've had such a big move in this stock. Do you think now is the time? Like, if you were long this thing, would you be booking profits already? And secondly, how do you short something like this? Because it's been moving straight up here. Like, if you think eventually, do you think we're due for a retracement here on something like this? First of all,
first of all, if you're long, by all means you should be out. If not even earlier, or at least I would say by this stage, because you also have a flat area in between. If you look at the 14th of November, okay, for the next 6 sessions, it was very flat. And then it gets a new wind and just another wave comes in, and now we're entering a second flat area. I think by now, if you're not 80% out, you don't know how to size your trades. Remember, sizing trades are 2-factor, entry and exit. So you got sizes right on entry, sizes right on exit. At least you should be out by 80% out. A. 2, would I short this thing? No. Not with this market, and there's no analog. Remember, we're like, as I said the other day to PMT, and I know you guys get it, you read it. I said we're like Ferdinand Magellan, the fellow who had circumvented he went around the world. Okay, and found the South Americas, the Cape Town, South America. We are in totally uncharted territories, not because of the stock, but what's happening that's making this move, which is this election. Okay, so I would humbly submit, I don't know. There's no analog. We're in uncharted territory. The indices are in uncharted territory. Markets are all-time high. So you have to nibble here, and you have to be extra careful. I would not want to short at this point a stock this strong, largest of the banking. This is the strongest, as it always has been. Always, Goldman Sachs has always been a leader in XLF. I will want to short it up here. But I would take a lot out of the table, maybe leave a little runner there. Why is it not ready yet? Because I don't see any exhaustion.
Yeah.
You guys see an exhaustion?
No.
I always think of a short for a second mouse that gets the cheese. The first mouse is still running around.
Or the first mouse gets hit by the trap, and then the second mouse gets the cheese.
Right. But I still see the first one running around. So maybe we'll see it. Remember, think about Obama, right? When Obama came in, we had the same problem, different type of problems. Also, in uncharted territory on the downside, because you've never seen those levels for a long time. Also, we were losing 700,000 people on non-farm payroll a month. At least that was the run rate in January. Not a lot happened until Turbo Tim Geithner, the Secretary of Treasury, which came from New York Fed, opened his mouth on the first news conference. So maybe we need the event for that. Something like that where some of these guys come in early February or something comes up, let's see how they behave, and they turn out to be not as glorious as our dear leader is telling us, our future dear leader is telling us they're going to be.
All right, fire.
Maybe we're following North Korea's format. I don't know.
All right, let's jump over into a sector that has been going in the opposite direction, and that is gold. Gold has been going straight down. If you look at some of these gold miners, they got hit really hard on the Fed there just a couple days ago. Barrick Gold which is ABX, was 16. Now it's 14. Newmont, which is NEM, was 34 just 2 days ago. Now it's trading in the 30 handle. Gold has really come under pressure here in the last 6 months, and I'll tell you, at the beginning of the first half of 2016. The gold miners were the hottest thing, and now they've cooled right off. And it's funny how it turns. If you can identify these turns, that's where you can really make some money. But I like your analogy where you don't want to be the first mouse, because the first mouse might get hit by the trap. Being the second mouse is usually the better way to do it. What are your thoughts here on the gold miners now that they've been so weak here for the back half of 2016? Is it safe to jump in these things, or again, we're being the first mouse here? We should wait to be the second mouse, the one buying after the first guy.
I think it's a good proxy for that is also looking at GLD. Look at the volume.
Sure.
I don't see capitulation yet. I don't see a big volume. We're still at 2 sigma negative. We haven't hit 3. Volume hasn't gone up. The last time we did that were right after the election for 3 days. We had 1, 2, 3 classical move from the, from the 9th to the 11th. Okay, classical move down, and then we came roll over, jumped into a drip, 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 -1, -2 sigma channel. If history is any guide, when you don't hit -3, okay, or at least you hit -3, but there's no reversal, there's no V bottom, and just roll over into -1, -2, that's a drip, drip sale. That's just that. It's going to continue. It's like someone put a needle in you, and you know it's IV, it's probably good for you, but they're putting it 1 millimeter at a time. You're still not helping you, and you still feel the pain. So the pain is on, and there's no help. Why? Look at the volume on the bottom. There's no capitulation yet. We got more to go.
Fari,
that's on the GLD.
Before we let you go, wild year in the markets, the Brexit, the election, excellent returns here. Sigma channels, your opinion, what your gut, just a little outlook here, just for the broad market, 2017.
Well, I'm proud to say that we were just named 113 in a nation. One for the last 90 days, one for last 6 months, and then 3 for last 12 trading months by time it digest. And our position here is that we'll probably, most likely, our analog would be for sure Reagan. That is, we'll start with a huge, huge promise, and then we will have to face some realities, and then market will slowly drift down. I don't see us to have a huge up market next year from here. Because after a while, the hype is gone, some reality sets in, and it's one thing to win an election, the other one is to govern.
Great point.
And as you know, even with Reagan came up with great plans, but by the time they were implemented, the market saw that, sold ahead, and the lows were made in 92. I'm sorry, 82, summer of 82. So, and that's the analog, by the way, we're going to be pursuing. I believe we're still tracking that. It means big run-up, big hope, everything into Inauguration Day, and then the reality sets in. Buy a rumor, sell the news. And by then the champagne has worn off, and reality sets in, and we're going to go to higher volatility on the downside, and Tico says, go sell everything.
We've been on the line with Fari Hamzy. He's the founder of Hamzy Analytics. He joins the show to give us his insight into the markets and keep us entertained for sure. Fari, you can follow him at Hamzy Analytics. He's always there making some calls in the market along with Captain Tico. Fari, thanks a lot, and we'll get you back on again soon.
Thanks for everything, and great year for all of you has been, and for me too, and look forward to New Year, and Merry Christmas and Happy New Year, and Happy Hanukkah.
Thanks, Fari.
Bye-bye.
All right, it is 8:34. Dennison, why don't we just take a quick break?
I need a break. I need to recover after that. After Fari, I need like a towel.
That mouse analogy was funny though. That was good.
Well, I think the comment of the year may be that Bank America is a hairpiece, right?
That's not what he.
That's what he said.
All right. Okay. That's not what he said, but okay.
All right, we were talking gold a little bit there with Fari. We're going to do that a little bit of more of that here with our next guest, Nigam Aurora of the Aurora Report. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elconin with Dennis Dick and Spencer Israel, and we have Nigam Aurora on the line. He is the author of the Aurora Report. How you doing today?
Good. Good morning to everyone.
Thanks for coming on the show. You are a distinguished master of the financial markets, an engineer, and a nuclear physicist by background. How did you end up in the financial markets?
Well, so I had early successes with my businesses. I founded two of the fastest growing Inc. 500 companies in the United States. And being a very analytical, mathematics type person, what I found is, unlike other ventures, if I touch them, they turn into gold. Investments weren't easy. I had my ups and downs. Made good money, lost more money, made good money, lost more money. And finally, I decided to give up on brokers. We used to call them brokers those days. These days we call them, wealth advisors or financial advisors or investment advisors. And started learning more, starting with Graham, Dodd and all that, fundamental stuff, and decided after a while that did not work as well as I wanted to, then got into technical analysis, Maggie's book, The Old Bible. And as a matter of fact, got to a point, being an entrepreneur, even started a company those days, we used to do charts and graphs, paper. So I thought there was an opportunity to do computer-based charts, started doing a company, but then pretty soon realized technical analysis didn't work that well, and then got into neural nets and genetic algorithms, and decided that didn't work well. So I kept on experimenting with these things, basically deciding nothing really works great.
And
along the way,
what'd you find out?
What? Yeah.
I found out that none of that works very well. And the reason is stock market is so complex, and all the markets, because what happens is driven by the actions of millions of people across the world, right? And especially maybe a few thousand big institutional managers. And you just don't know who's going to do what, when, and then there's a cause and effect. If one person does one thing, then what's somebody else going to do, and that's what somebody else going to do. So my conclusion mostly was that it's very, very difficult to excel, meaning beat the market or consistently over a long period of time, as had been my experience, and the money managers I employed, I saw, what they were doing with my money, the same thing. But then along the way, I wrote a management book on change management, and has, is book primarily written for CEOs and senior managers, has nothing to do with investment. And I was going around giving speeches, and one day I was sitting on a plane, and I started talking to a guy sitting next to me, who happened to be a hedge fund manager. And he says, we have been using principles from your book in our investing successfully, and we want you to do this, this, and this. And what do you think of this? Started picking my brain. And until then, I had never thought about it, that what I wrote in a book about management somehow could apply to investments. So the concept there was that if you can detect change before other people do, you can do very well. And it always works.
That is a great point. Being able to detect the change, and I will, second that. I've been trading for 17 years here. I can say if you can get ahead of the trend, if you can detect when it's going to turn, obviously there's huge money to be made there. How do you detect that change, though? That is the $1 million question. Okay, detecting the change.
Well, that's a hard. So that's a hard part. So I have spent a few years of my life creating change and also detecting change, trying to set up companies. I've been involved in setting up over 50 companies along the way. But that's very, very different than what you're doing in the markets, because in the markets you may think, gee, I'm detecting a change in this stock and this industry, and you may go buy it and take a large position, and nobody else cares, right? You could have dead money or even go down, right? Overall market goes down. It doesn't care what you think. So it took me a while, basically experimentation with various algorithms, with various things, to come up with really two things. One we call is a ZY exchange method that has 6 screens, and the other what I call is a ZYX allocation model, which is primarily a lot of leading indicators, economic indicators, and then correlations with currencies and stock market and commodities and so on. So we came up with a framework, kept on refining it, and I'm happy to report that since 2007, that method has consistently worked. I don't know how long it's going to work, but I think it will work, because one other thing we did is added an input as to, one of our input is price. What's the price doing of a certain stock or the market itself or currency, whatever. And then we have some filters based on that. So what we do is we look at for a correlation as to what our algorithm is predicting and what the market actually is doing, and whatever the difference is in an algorithmic way, meaning with some weights and modifications, we add it back as an input. So we're constantly adjusting our algorithms. So our algorithms are always self-changing. And I think that's the secret ultimately I found. Yeah, it's adaptive. That's the closest to Holy Grail I've been able to get to. And so that's because that just makes an adjustment to whatever is happening. And that seems to have worked out very well for me.
So let's look at the current market environment here. A lot of things have happened in 2016. Just overall, wrapping up the market here at all-time highs. What I've been noticing is we've been making all-time highs, just not by an incremental amount, but just blowing it away. I mean, are we just in a runaway bull market here, or do you see any signs of weakness or any signs of an impending correction?
Thanks.
That's an excellent question. We all struggle with that. I'll tell you where I am. So one thing I'll tell you, which I incessantly preach to our subscribers and clients, and I always tell them that no one knows, including me, what's going to happen next. And that's kind of difficult because I run a hedge fund, and, we publish a report, which has investment newsletters. You guys have been traders, so I think you'll understand. But to people who are not that experienced, try telling them, gee, subscribe to my newsletters, but I am telling you that I really don't know what's going to happen next.
You're honest.
What a business model, right?
Yeah. So how do you make money if you don't know what's going to happen next?
Yeah. So we say, so what we do is we try to look at. So first of all, we try to do is so my rule number one is be very, very humble, you know, and the rule number two is start every day with the presumption that I don't know what's going to happen next. So I come into my office every morning with a little thing in my head, repeating several times. I got to start from scratch. I don't know what's going to happen next. I'm going to start my day without any opinions. Now, it's pretty hard. I've been doing it for years and still not quite there yet. Opinions don't go away. But anyways, getting to the point of your question. So, tiny bit of background. So I came into this election a little different from, what you were hearing, because before the election, most people were Clinton is going to win, right? I did not predict Trump win or said Trump will win. I was not one of those. But if you read my writings, I was incessantly writing, hey, don't buy into that Clinton will definitely win. Anything can happen. So that was part. And the second part is if you go back and look at my writing, you will see when everybody was saying that if Trump wins, gold is going to go to the moon, dollar is going to crash, stocks are going to crash. I was very, very definitive. If Trump wins, dollar is going to get stronger, economy is going to get stronger, stocks are going to get stronger, gold is going to get weaker. So it came at the right time frame. But the question is, where do we go now? So what I see in our universe is that money managers are lagging their benchmarks. They are going to buy until a year end. We know that. So that I feel pretty comfortable with. Also, we know that there's not going to be a lot of tax-related selling this year like it's in normal years because next year tax rates are going to be lower. So why would you sell them this year if you have gains? So now the question comes is January. We come into January. People are going to be free to sell if they want, for tax reasons, if they wanted to sell whatever was postponed from this year into next year. Trump honeymoon, if you look at past elections, often continues to 100 days past the inauguration. So some of that honeymoon is going to be there. So those are the positive factors. On the negative side, well, so let's look at very, very basic fundamentals. So our projections, our models are saying that earnings without adjustment for lower tax rates are going to go up about 2 to 3% next year. And in that, I'm taking into account lower regulations and so on. And lower taxes for corporations are going to add about 10% of the earnings. So we're talking about 12, 13% adding to the earnings. Market is already up since election about 8% or so. Russell small cap is up a lot more, 15%. So that tells me that the upside, at least based on the fundamentals, if you were to use a base right at the election, is another 4 to 5%, maybe. So that's that. But, you guys have been a trader. Fundamentals don't mean anything when animal spirits running. On the upside, they go upside. If they go, if they get scared, they shoot on the downside. So our philosophy is going to be what we did. We came into the election, for us, we're pretty conservative. We always hold a large amount of cash, pretty fully invested in from that perspective, but still holding cash. So our average is about 20% cash is our average, 25% cash we always hold, no matter what we think, even when we're uber bullish. The reason being, one other thing I've learned, and I know you guys have seen over years, that there are always new opportunities. And I don't want to struggle with when a new opportunity comes along to say, gee, I don't have any cash. What do I sell now?
Yeah.
So we're always prepared because remember, the objective is to catch the change early before people get in and take large positions. So we came in about 28, 30% cash before the election. Remember, 20, 25% of it normal. After election, we put another 10, 15% cash to the work the very next day. And we are still holding. I'm not telling people to buy anything today if you're a long-term investor. We work on some special situations and some short-term trades. And that's what we're telling people. If you have to do something right today, focus on special situations, focus on short-term trades.
Nigam,
For long-term investors.
Before I let you go, I
ahead.
want to ask you about gold. I know you followed the gold market
Sure.
very closely. Just got killed yesterday. Gold still up for the year here. What do you think? 1136.50 is where the Fab Gold's trading. Silver down at 16. I know when we had our early conversation, you told me you were short, but
We are?
Yeah. Oh, I thought you said you were. I'm sorry.
We were. We still are.
Oh, okay. All right. What's your downside protection? Give us your outlook for gold in 2017.
Well, so our downside projection, I don't know if it's 2017 or 2018, that gold can go as low as $850. Now, we're not going to trade based on that. I mean, we added to our shorts, day before yesterday morning. So that position is pretty good. So we're going to hold. So let me give you a little bit of a background how we kind of work. So we take on some core positions, fairly small ones, that we tend to hold for a very long time. Like, remember when silver was $50? We still have a position from $50 short silver. We're still holding it.
Oh, wow.
But that's not a very large position, okay? We're going to hold it still longer. But then what we do is trade around that position. So around that silver position, since then, we've probably done 100 trades. I'm just picking a number. Maybe it's 150, maybe 75, where, we've gone both long and short for, week duration, 2-week duration, a month duration. So we're going to hold our short precious metal positions and then trade around them, on both sides.
Okay.
So that's our tactics. And again, as I said earlier, I'm not going to get hung up on, I think it can go to 850. We're going to let our algorithms tell. I mean, I'm very happy to take long positions also, if that makes sense at a certain point for a shorter term.
All right. We've been
Now, I also want to tell you, before I go,
okay,
longer term, 3+ years, we are very bullish on gold.
All right, taking a two-sided approach. Nigam Arora of the Aurora Report. You can follow him on Twitter as well. Thanks a lot. Great information. Nice to hear some fundamental talk. We'll get you on again soon.
Okay, thank you guys, and thank you all listeners. Bye-bye.
Thanks, Nigam.
All right, 852 here. Dennis, S&Ps have only moved a couple points. We did not mention it's quadruple witch today.
Yeah, so we do have imbalances which are crazy here, but before we jump over there, I just want to summarize. So we had two, guests here, very involved in the markets here, and I think there was 3 points, solid that were made. I love Far East, the mouse analogy here. And what he was basically saying, is you don't want to be the first mouse because the mouse gets hit by the trap. And the second mouse gets the cheese. So if you're jumping into these, trying to short the financials, trying to catch the top, you've been getting hit by the trap again and again and again. I've been hit by the trap too. It's been difficult, but you wait till you start to get some confirmation. You wait till it starts turning, and that's where you strike because then the first mouse has already been hit. So it's the second mouse that gets the cheese. So I love that analogy. 2 points, that Nigam just made here, which were great. First one, to be humble. I mean, this is the most important thing about trading here, and I've learned in 17 years, when you start to get overconfident, when you start to do things, that's when you start to make mistakes. It's all about being humble here. Even if you're doing really well, humility is always good, a good virtue there. But the second point, too, he was making is, he says, I don't know where it's going to go the next day. So not having an opinion. And you'll say, okay, well, how in the hell do you make money in the market without having an opinion? Well, I've traded 17 years, and that's what I've always strived not to do, is have an opinion every day. I'm basically doing statistical arbitrage and looking at relationships. I think he's looking at similar stuff here, talking a lot of quantitative analysis. He was in that interview there, but looking, just at what your system's telling you to do, that you've developed over time, as opposed to saying, I think, this is going to happen because of this, this, and this. It's more of, looking at your systems and what are your edges and your systems that you've developed over your trading career telling you. That's, not having an opinion going in. So, and I try to do that every day as well, and I do better when I don't have an opinion.
All right, 854. S&P still up 3.25 here. Should we go to some of the news? Did we even cover our earnings reports at the top?
I don't even know if we're going to get to the earnings reports because we only have 5 minutes, and we got to talk about the quadruple witch here, Joel, too. So we got to go to these imbalances. They are huge to the buy side right now. The S&Ps are trading up. I don't know if these are going to stick, but everything has a buy imbalance here. And you start thinking, man, this might actually make sense, where you could get a capitulation open here where everybody's got to buy. You got institutions coming in. They know it's a big day where they can move some stocks. They got to jockey against their open option positions here. There may be some institutions that need to buy today. And I'm just looking here. Bank of America, 3.6 million to buy. Citigroup, 553,000 to buy. Coke, 870,000 to buy. It's down because of a downgrade, but it's coming back a little bit. Merck, 600,000 to buy. Pfizer, 1.2 million. AT&T, 1.2 million. ExxonMobil, 1.1 million. These are huge. Now, it's early here, and there's going to be big institutional order flow that's going to come in potentially in the opposite direction. But as of right now, if these buy imbalances stick, we are going to open a lot higher on the stocks than we are relative to the S&P future. So one of two things, I always say this, one of two things is going to happen. Either there's going to be some more institutional order flow that comes in and offsets these imbalances, and then obviously they're not going to be opening up as much, or the S&Ps are going to continue to climb here through the pre-market. So let's see what happens. I'll give an update on Twitter about 9:20. I'll let you know what's happening with the imbalances, if they look like they're going to flip or if they have flipped. But as of right now, we're looking at a very strong open.
All right, unless you are long Honeywell here, came out with some fiscal year 2017 guidance. I mean, it says 685 to 710 versus 708, but that has the street in a tizzy here. I know Bob Wire was looking at the 105.25 level. Not a lot of trades going on in it here. I see a tick at 106.28 now. The ARBs are coming in and they're assessing this a little bit more at 114. So let's see where that opens. It's still trading lower here. Obviously, that odd lot print down there, we've come roaring back. You hit, was that on any shares there? No, 500 measly shares traded at 106.28. So
that's just somebody saying, they're scared, and they go boom. You can't, at 7 o'clock in the morning or 7:30 in the. What time was that print at?
That print was just as we started the show. No, that was earlier. That was 6:45 a.m. It was the first print coming after 4
When you're
o'clock.
before 7 o'clock, a lot of systems don't even come online until 7 o'clock. A lot of your exchanges aren't even online yet. Edge isn't even online till 7 o'clock. So when you're starting to hit stocks at 6:45 in the morning, just randomly hitting bids, they are wide. They are, and you're going to see, a lot of stocks. You might be thinking you're getting a good deal by hitting the 106. It's the best bid out there. That's 10 points lower on Honeywell. I don't think there's no way that Honeywell is going to fall 10 points on that guy. Somebody just basically threw away 8 points because the stock is now bid here at 114. You got to watch the pre-market trading. The spreads are too wide that early in the morning. If you don't know what you're doing, you're going to make, or you could lose a lot of money. And that's, the one thing you got to remember is liquidity does not really start to pick up. Even at 9:30 in the morning, I talk about this all the time. Right when the stocks open, the liquidity is pretty low right after that opening print because traders are still getting a feel out there. High-frequency traders, who are the majority of your market makers, are getting a feel for whether there's strength or weakness here in the stock today. And there's turns. There's different things. They're trying to identify that change, the daily change that Negan was just talking about. So what you've got to do, obviously, is, if you're looking to, get out of a position, sometimes it's better to sit back and wait a little bit until that liquidity comes in, especially if you're a big fish. Institutions are coming in, and if they're missing on that opening print, they're not trying to get out at 9:31 after the opening print because the liquidity isn't there for them to get out. There's no bids there for them to hit. The spreads are wider. But once you wait till middle of the day, 9:30, 10 o'clock, 10:30, 11, then it starts to thicken up. The markets start to feel where they want to be, and then you can get in or out a lot easier if you're a bigger institution.
All right, just looking at the reset here on the Honeywell, trading at the 114 area after seeing a little more liquidity coming into this. I'd have to bump up here, see what happens at 113. I see a couple lows at that area, as well as a bunch of lows at 112. So half and whole numbers. We'll see if that comes into play. All right, we are going to wrap things up here on this Friday. Spencer, you'll be running the show with Dennis next week. I'm going to be out for a few days. You want to preview what's on the docket?
Where are you going?
I'm going to sunny Florida.
So you're going to see Fire while you're there?
Well, he's on the West Coast.
Yeah.
I'm on the East Coast.
Oh, okay.
But maybe I'll see if he wants to meet in the middle.
All right. Well, next week, let's see who we got. We got Gary Kaltbaum and Tim Melvin on Monday. Nick Shaheen on Tuesday. We've got Tim Anderson. Wednesday, Trip Miller from Gulen Capital and Pavel Molchanov. He is a sell-side analyst on Thursday, and Chris Brecker from Simpler Trading and Nate Tobik, the bank analyst, on Friday. So a pretty good slate of guests on next week. If you missed any part of our interviews today with Farley or Negum, catch it again. The YouTube video is posted about 5 or 10 minutes after the show ends automatically. Then the podcast is up later in the day on iTunes, SoundCloud, and Stitcher. Just search for Benzinger or PreMarket. Please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. So that's it for us now. Hope everybody has a good rest of your day and a good weekend, and we'll be right back here on Monday, just myself and Dennis. Have a good weekend, everybody.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.